Greetings. This is Jim Brooke here in Kyiv. I'm the founder, editor of the Ukrainian Business News. I've been living here for about 5 years, and we're very lucky to have a distinguished group of 4 panelists talking about the finances of Ukraine. The title was a little hard to figure out. I actually talked to someone of the EBRD. Neither of us could know what financial capability building means. So we decided to talk about something a little more concrete, which is the money flowing into Ukraine and what the prospects are for change. I'd like to start with the number one international financial institution, IFI, lender to Ukraine, who is Matteo Patrone. And Matteo, I quoted in the Ukraine Business News just last week, you were guesstimating that this year, 2020, the EBRD would be loaning Ukraine 850 million euros. That's great. Maybe you have news of new loans or the outlook for 2021.
Let me stay in 2020 for a second, because actually, indeed, the books are not closed yet, and as we speak, we are finalizing a few significant tickets. So I would stick to that guesstimate that I gave last week for the moment being, but there may be changes. And the next couple of weeks will tell us actually where we're going to land. I think it's no secret that one of the significant transactions that we want to finalize this year is this package for 450 million euros for Kraftador, and that is will be tranched. So it will be 100 million euros for this year, and then 160 for 2021, and another 190 for 2022. And I mentioned this transaction because it is important, in my view, in the context of the reform agenda that we, together with other IFIs, have in Ukraine, and in particular in terms of governance, anti-corruption, and procurement. And as you know, Jim, and the people that are listening may know, we signed a memorandum of understanding with the government back in October, together with Prime Minister Shmyhal, and under the aegis of President Zelensky, exactly on governance and anti-corruption. And we determined that the project with the Kraftador would have been a pilot for rolling out that engagement also in other possibly in other state-owned enterprises. So we are determined to close this transaction, and hopefully this is going to happen imminently, with a strong component of anti-corruption and procurement practices enhancement. But we also have a significant ticket in the private sector that we want to close before the end of the year, and a couple of other transactions in the transport sector and with the city of Kiev. As of now, we stand at 640 million euros. So again, the guesstimate I gave last week stays for the moment, but hopefully we're gonna go over it. As you know, investments is not all what we do in the country. We engage heavily in policy dialogue, and we continue working on the areas which are close to the core business of the BRD, which is fostering the development of the private sector in the country. So on one side, we work together with our partners in the European Commission on the reform agenda of the public administration, exactly to create the infrastructure to foster the development of the private sector. And we launched the second phase of the Ukrainian reform architecture, which is something that we are particularly proud of, because not only because it works, but because we do it leveraging on the talent of 200 young Ukrainians that are deployed in a number of agencies indeed to kickstart and foster reforms. And we continue working with the business ombudsman on creating a level playing field in the private sector. And we continue working with the National Investment Council. We continue working with a number of SOEs and SOBs on corporate governance reforms. We have just concluded an agreement with the Ministry of Economy on supporting the Ministry of Economy on the completion of the corporate governance reform, with finally, hopefully, the process in the RADA of the what is called the 6428, which is the part of the reform agenda in the public sector. And we are initiating a process with USAID and the American Chamber of Commerce on the development of local capital markets. And we try to take an holistic approach to that. And this will continue over 2021, obviously. We entered 2020 with a number of ideas, in particular in the public sector. And Anders knows that because he was in the supervisory board of that company at that time. For instance, in the IPO of UZ. And we also signed a memorandum of understanding with Ukrainergo for the development of an investment in the storage sector, which we thought was very important, in particular in the context of the development of the renewable energy sector. And then obviously the crisis struck and we had to readjust our ambitions in terms of what we do, in particular with the public sector. With UZ, we are working now on a liquidity line. With Ukrainergo, we'll see what we will be able to do, but clearly if there is, so we went through a difficult period, as we know, in terms of predictability of the business environment in Ukraine, in particular in the renewable energy sector, which impeded us to engage with the company. But if there is a strong commitment by the authorities to work on the restoration of the payment discipline to renewable energy investors, but also more in general on the definition of sustainable strategy for the energy sector, we may resume discussions at some point. And in the private sector, we put in place in Ukraine, like in all the other areas of activities, all the other regions of activities of the EBRD, liquidity or resilience framework. I must say, and with some satisfaction working in Ukraine, that we had some take up of that. But most of our business this year in the private sector has been actually with companies that continue investing, which shows that actually the economic system and the economic texture of Ukraine is pretty resilient. And I think part of that is due to a very solid banking sector. So again, credit goes to the team of the National Bank, and we'll see how 2021 will play out in that sense.
Yeah,
I would probably stop here, but I'm happy to.
Yeah, Matteo, if I could ask a quick follow-up. I mentioned the conditions. Ukravtodor, a soft loan might be 2% interest for 20 years. A loan to MHP or something might be for what are we talking about here?
No, I'm not going to discuss the conditions of the loan if this is what.
Well, let's say a public agency. I mean, people say it's soft loans, and consumers don't really know what that means. Is it 20 years? Is it below market? And you probably for the public agencies, you loan at lower rates. We don't have to get into specifics, but.
So it's definitely below the cost of money for Ukraine in the capital markets, because this is what is meant to be a sovereign transaction with Ukraine. But I think what is more relevant about this transaction indeed is not the financial part of it, is the conditions that we attach to it. And again, I refer back to what I was saying earlier in terms of both conditionalities for disbursements, but also for activation of the second and the third tranche, which are very much connected to the implementation of a credible anti-corruption plan in the agency. And I think it's worth focusing on that, really, rather than
one quick.
But it is indeed a long-term loan with margins which are, again, not comparable to what even with very successful issuances. And I saw Sergey joining us for a second. Even with the very successful issuance that the Minister of Finance implemented in the past few days.
Yeah. So I know it's not your favorite topic, but the whole issue of the green loans, and I remember your predecessor, Francis Malige, saying these rates are too good to be true. Now this is maybe 2 or 3 years ago when EBRD stopped loaning for solar projects. We now have a bill that may run up to $1 billion in unpaid debts. There's talk about a green bond. There's talk about EBRD maybe giving some guarantees. You're talking. Will this be resolved in the next quarter, do you think? What's your prediction there?
I don't have a prediction, to be honest. And unfortunately, it has been my favorite topic all along 2020, because we've all been very busy trying to negotiate a decent outcome. I think I can be open with you, because I've been open with authorities. We are not satisfied with Law 810 for a number of reasons, because the process was not conducted in a way that could get the consensual support of all the investors, including the majority of the investors in the solar sector, and because it poses a retroactive negative effect on a regulatory framework, and that is never good in terms of predictability of the business environment. And in my view, especially having worked also in countries where that happened in the past, for instance, Romania and Bulgaria, that has typically a negative impact on the business environment well beyond the specific sector. And with all the collective ambition we have in terms of PPPs and concessions, etc., that is a pity in my view. But also because even after the issuance of the law and the signing of the MOU, the discipline in the payment has not been completely restored. So that needs to be done as soon as possible. But to me, it's even more important that the conditions that led us there are removed from the system. So I think we need to think a little bit more holistically than focusing on the renewable energy sector. And then, as it happens in many fields, I tend to agree with Francis that was probably too good to be true. And that is indeed why we stopped taking on new projects in the solar sector, but we continue financing those projects that were already in the making and where investors have put equity at stake, and why we have supported authorities in structuring a new framework based on auctions rather than feed-in tariff.
Yeah, good, excellent. I see Nadia has joined us, if I'm right. Thank you, Matteo. And I got the impression that Minister was there, and I don't know if he is. There's a Matilda Kuklish. I don't know if the Minister Marchenko is there. Please unmute your microphone and let's hear from you. Nadia, I can't hear you, Nadia. You're on mute. You're still on mute. Yeah.
Okay. So I'm sorry. I guess I had an interruption in my internet. So I didn't give you the proper introduction I had hoped to do, Jim. I don't think the minister is here. So if you want to just go to your next panel.
Yeah. Okay, good. There's a Matilda Kuklish. I don't know if she works.
She is one of the interpreters, so she is
okay, good.
For our Ukrainian colleagues.
Yeah, wonderful. Well, good, Nadia. Good to see you. Say hello again. Why don't we jump? And once again, Matteo, thank you very much for that very good view. And we do all support the conditionalities, and let's see what comes out of the Biden administration on that kind of support. Why don't we move from EBRD to World Bank? We've got Roman Kachur here with us, who is the Ukraine representative of the World Bank, former deputy finance minister. And Roman, thanks for shepherding the $300 million loan, soft loan, that came through just last week. That was good news. So Roman, could you tell us, you're fighting the good fight for Ukraine inside the World Bank. What are the prospects for 2021?
Thank you, James, for the introduction. And your UBN news are usually part of my morning brief, so I recommend to others. Let me also thank to Nadia for making effort and putting all us together, and many other high-level people from Ukraine to, especially in this challenging time, also virtually. So first, let me touch on the global economic environment, as this basically set the stage for Ukraine outlook, and then I'll touch base on Ukraine and the World Bank support for Ukraine. Just yesterday, we here at the Board of Directors discussed a World Bank flagship report, the Global Economic Prospects for the next 6 months. And this report will be officially released and become publicly available in January, but I'll share a few insights. First, fortunately, COVID cases continue to grow, and the region around Ukraine, the Europe and Central Asia is hit more than others, as well as Latin America. And this effect will unfortunately continue in the first quarter of 2021. Most likely vaccines will not arrive until then. And it obviously has implications for economic activity. Due to this, the World Bank downgraded the global forecast, growth forecast for the global growth, and also including for Ukraine, since the previous one, which was released in June this year. For many countries, recovery to the pre-crisis growth trajectory will take years, and for poorer countries, it will take even decades. So the growth will recover, but getting to the same trajectory where we were just a year ago will not be that easy. And governments and the central banks across the world reacted, obviously, with softening the monetary policy, which means reducing the interest rate and then providing liquidity to the market to avoid a wider financial crisis and provide emergency response. In some market, they even went with a purchase of assets in some emerging markets. But increased borrowing also it needed the increased borrowing and widen the deficits, the fiscal deficits. So obviously the expenditure went up and the revenue base declined due to the natural contraction of the economies. Almost all countries ended up and will exit the crisis with an increased amount of debt. And the sustainability of this debt is becoming a key issue for many countries. Unsustainable borrowing, meaning that at the higher rates or at shorter terms, will be quite risky and will require additional resources to service such debt. And such debt service will lead to crowd out financing from other sectors like education, like social policy, defense, and potentially others. So what are the main implications for other governments and also for Ukraine is that the need for reform is even higher than before the crisis. These reforms are aimed to improve the business climate, the governance, reduce risks of doing business, and will allow to attract additional investments which are so needed for growth. Emergency response on fiscal and monetary policy stimulus can help only to a certain point. And we need to make sure that institutions are working, the business environment, trade, and climate are becoming the global issues. No country can resolve by itself. This global cooperation is essential. So now allow me to zoom in on Ukraine. It's first time in the history Ukraine came probably prepared, the most prepared for the crisis and external shocks with strong macroeconomic fundamentals. Therefore, there is no financial or banking crisis following the economic one this year. Ukrainian currency is stable, reserves are record high, no banks collapsed, inflation is record low, and level of the deficit and public debt allowed Ukraine to fiscally address the crisis with no major impact on public finance sustainability due to the prudent monetary and fiscal policies. Reforms in the past years after the revolution of dignity were well rewarded in this crisis. Historically, World Bank supported most of the key reforms in Ukraine, including starting from the financial sector reform immediately when the Ukraine started the banking sector cleanup. Later, the energy sector reform, basically creating the market for gas, pension reform, and these are just a few. There were many others. Further reforms are needed to recover the economy and achieve a sustainable growth. As for the World Bank, let me outline a few priorities. The first one is land market reform. You know that the World Bank was a proponent of this reform for many years, and big progress was achieved in spring when Ukraine voted the land market turnover law. But this is just the first step. Before the opening the market in June next year, there is a need to implement complementary legislation to safeguard the property rights for landowners, to provide financing to small farmers, and basically to avoid consolidation of the market between a few players. 700 million is attached to this reform, and the first part, 350, was voted and approved by the board of directors in June. Unfortunately, the money was not disbursed because initially after it was the resignation of the central bank governor, and later the constitutional court ruling, which basically reversed some of the policies and didn't allow to disburse the first tranche. But the second tranche is attached to the remaining complementary legislation, which has to be implemented for efficient land market opening. World Bank believes that the opening the land market will become a major driver for the Ukrainian economy, among others. Second is energy market. Matteo briefly touched it, especially on the electricity market. So Ukraine made a good progress on the gas sector. As you know, that was a collective effort, probably of all IFIs and Ukrainian government to create the gas market. Now, Ukraine having the largest storage, which are 90% full of gas, a lot of from private investors, is becoming a key player in Europe in gas trading. And all commercial terms with a lot of private sector participation. So electricity market is coming next. It's important first to avoid crisis and the imbalances which were created on the electricity market. And second, connect the Ukrainian electric network grid to Europe. The World Bank stands ready to support it with another 500 million investment loans, both to Ukrenergo and Ukrainian transit gas system company. But obviously reforms are needed before we can proceed. Financial sector reform, the banking cleanup was an important step forward. But after the cleanup, Ukraine ended up with almost 60% of the banking sector owned by the state. Now it's important to bring up the private players. EBRD and the IFC, the private wing of the World Bank Group, are working on that. We almost reached the agreement with Bank, owned by the state. The board of directors already approved the transaction, and we hope to sign it in the probably upcoming months when the IFC will become the shareholder of Bank. And it's just the first step. We hope that EBRD will follow with the other player on the market. To continue on in the financial sector, obviously, resolution reducing the levels of non-performing loans is essential. None of the shareholders are willing to step in when there is a huge volumes of the NPLs and not clear mechanism of its resolution. And also the corporate governance, which shows the prudent policies how the banks are managed. Infrastructure, also the large players, EBRD and EIB in this sector. IFC is working on bringing private capital to the road construction. There are 4 PPP deals which are being under preparation between the Ministry of Infrastructure and the IFC teams. So hopefully we will have real private capital flowing to the sector, which in the past was predominantly mostly financed by the state financing or loans through the state agencies. But before we can move with all the reforms forward, we have also to ensure that the conditions of the previous lending are honored. Unfortunately, with the Constitutional Court ruling on the anti-corruption, on the corruption prevention agency that reversed some of the policies on illicit enrichment, which were incorporated in the loan covenants in the past, and that basically blocks the further moving forward with the next large-scale financing to Ukraine, especially the policy lending. Cooperation with EU, IMF, and World Bank, our strategic partners, is a key to support reforms and signal to the market on the potential debt sustainability. Such cooperation, it's not only the resource for concessional financing, which is cheaper than the market, like Matteo mentioned, but it's also a strong signal to the private sectors that Ukraine is a trusted borrower and can source funding on a better terms, meaning at a lower rate and longer financing. Right now, we have quite a favorable conditions on the external market, but that cannot be guaranteed. That cannot be granted for taking. It may be changed anytime, and Ukraine has to be prepared. And finally, quickly, this year on the emergency response, the World Bank supported Ukraine with almost 800 million financing. First is to support the most vulnerable people and social policies in Ukraine. The first loan was approved in April, 150 million loan to the Ministry of Social Policy, followed by the 300 million loan last week, which James just mentioned. Healthcare sector, 135 million was approved in April for purchases of critical equipment, the test and ventilators, and another 90 million is already approved and is waiting to disburse for the vaccine purchases. And also a couple of weeks ago, we approved the loan to support the recovery on the East. It's a joint financing. The World Bank and the EIB will be supporting this. So it in totals bring almost up to 800 million new commitments this year. And as of now, World Bank has about 1.5 billion financing reserved for Ukraine, but this new financing is largely conditional on the reforms moving forward. So there is a long way forward against of us, a lot of things to do, and a big chunk of financing on the table. Thank you.
Great, Roman, thanks. And it's great to hear that the World Bank is so involved. And one quick question, similar to one I asked Matteo, from the layman's point of view, the public debt goes up. What are your conditions? Are they 15, 20 years? This idea, some people refer to the World Bank as aid, some refer to it as soft loans. I know you probably have a range of conditions for loaning the money. I'm telling about the years, the tenure, and the interest rates, the yields. I can't hear you.
As of now, I won't go into all details, but those loans are highly concessional for Ukraine, usually not available on any equal terms on the market. it goes up to 30 years of maturity with up to 5 years of grace period. And the pricing starts, the pricing is about 180 basis points above the basis, the market LIBOR or new rate.
Yeah. So in the case of Ukraine, everything eventually is to be paid back. Unlike a loan to Burkina Faso or something where it may be a.
Well, even to the poorest countries, the IDA financing which Ukraine provides, it's all to be repaid. Just the interest rates are more subsidized through IDA mechanisms. But
yeah, sure.
The World Bank, mechanism.
Yeah, well, thanks. It's really great, that wonderful overview. And I know you've lived Ukraine, so you're studying it very closely. I'd like to move on to John, and Anders, you'll be our wrap-up guy, so don't despair. And John worked for many years with what we all knew as OPIC, and they've rebranded, and they're now the DFC, or the International Development Finance Corporation. I think you can speak far better than I on what you're doing and what you see for Ukraine coming out of the DFC.
Thanks for the introduction, Jim, and thank you for the U.S. Ukraine Foundation for allowing me to join this panel, especially at such a late date. My presentation is very brief. I just wanted to speak about exactly that, the change from OPIC to DFC that happened this past January, and to just give an indication of what that might mean, not only for our agency and the investments that we support globally, but more specifically what that might mean for Ukraine. So as of January 1st of this year, the Overseas Private Investment Corporation, or OPIC, which many of you might have been familiar with, went away, ceased to exist, and was replaced by a new organization called the U.S. International Development Finance Corporation, or DFC for short. And there are a couple of key things of this new organization that are important to note. First is that it expanded the budget previously of OPIC from 30 billion to 60 billion. Secondly, it gave new authorities to the DFC that OPIC didn't have. So in addition to the debt financing and the political risk insurance that we've done in the past as OPIC, DFC has those programs, but also now has equity authority and the ability to do technical assistance grants for projects that it ultimately supports. But I think one of the bigger changes at the DFC that's going to impact Ukraine is the flexibility with regards to the US nexus. Many of you might have remembered that under OPIC, we always had to have a US connection in the projects we supported. In this case, under the DFC, it depends on the country income levels determined by the World Bank that determines whether we have to have that US connection or not. So Ukraine being a lower middle income country means that we don't necessarily have to have a US connection in the projects we support, which opens up a host of different types of projects for us to then consider and support. And right now in Ukraine, we have a portfolio, a legacy portfolio from OPIC of about $1 billion across a dozen or so different projects. And we're actively looking at new projects across different sectors, from agricultural processing, to higher education, to telecoms infrastructure, to SME development, which has always been a strength of OPIC and will be a strength of DFC going forward. So I think there's a lot of potential for the DFC to support greater investment in Ukraine. It really just depends at this point on projects, us finding or identifying projects that are highly developmental, support US foreign policy goals like energy independence for Ukraine, and that are credit worthy and are able to pay us back our financing or pay for the insurance premiums for our insurance coverage. So I'll leave it at that and happy to answer the questions going forward.
Yeah, John, that's great. And I know you've been here, and one feedback you've probably gotten face-to-face at AmCham meetings is that the sense that the middle level, whoever that is, if they could hit their mute button, that'd be great. John, can you hear me?
Yes.
Yeah. The feedback I've picked up here over the years from business people, that the KPI for the mid-level former OPIC employee was not to get the money out the door. It was to stay out of the Washington Post, to be blunt. And could we tell Mr. Ikshep to turn off his mic, or else kick him out? John, you've run into this, I'm sure. You've been to AmCham meetings, USUBC meetings, and people come up to you and say, you know, we've got an application that's been pending for 9 months, and these guys are tearing their hair out. Is there any new urgency to kind of get the let out and move on these applications and process them faster?
Yeah, so Jim, I think that's a little bit of an unfair characterization. I've dealt with a lot of those projects and those companies that have come to OPIC in the past over my 10 years being here. And what usually happens is they want to do things that we just can't do. They want to do equipment sales, for example, which we don't do, which our sister agency Exxon does. You know, our projects require some amount of investment beyond what we provide in financing, and that oftentimes with projects is not available if they fall away. And then a third general area of problems that we come across in dealing with project proposals for Ukraine is just the sponsors themselves.
Yeah.
And as a U.S. government agency, we have to be very careful in the projects we support and who they're connected with, because obviously it could have a detrimental effect on the project. And then, as you said, our position in the Washington Post today.
Yeah, and you know, you always got to judge what someone's saying is, you know, what's the source, and obviously the private investor would love to see a $10 million loan or loan guarantee from DFC, you know, by January 30th, and that's not how the world works. So you're well familiar with those. And John, thanks. I don't mean to sort of stick it in your face. Anders, you've been very patient. And one thing, Anders, I know you're very good at, and we've heard from Matteo and John and Roman, the word governance and, you know, trying to get on the deck, on the track with the Western standard practices. You've heard tens, hundreds of millions, billions of dollars that are in the pipeline for Ukraine. We have a new government shaping up in the US, in Washington, where you are right now. What's your assessment on how the Biden administration is going to work with the reform people in Ukraine to get things straighter and work with the IFIs, of which we have essentially three representatives right here?
Yeah, thank you very much, and thank you for the invitation to speak at this panel. Let me start with a broader picture how I see the situation in Ukraine now. You can say that there are two major aspects. One is the macroeconomic picture that Roman developed on, which looks very good. And you can say in comparison with other countries, Ukraine has had less of a decline. So the decline this year will be perhaps 5% of GDP, while Western Europe has 10% decline. And Ukraine this year will have a current account surplus of about 4% of GDP. And the reason is that Ukraine has benefited from an enormous increase in improvement in terms of trade. So this is entirely from external factors. It's essentially high prices of iron ore and agricultural produce, while falling energy prices. So Ukraine this year has actually had a big windfall. And economically, it has managed the COVID crisis quite well, while people are now very upset about the situation, and many countries suffering a lot from the coronavirus pandemic right now. But the reserves are now $26 billion. They haven't been that large since 2011. So those are the positive parts. The negative parts are what Matteo touched upon, the governance situation. And the IMF, that is not present here, has had a few major concerns. One is that the chairman of the National Bank was forced out in the middle of the summer, and that was in a conversation with the president. And then we have seen that 4 out of 6 members of the board of the National Bank have been forced out. And the question, this is not independence of a central bank, and therefore the IMF is not likely to provide money for quite some time until they are convinced that it's stable. Fortunately, the monetary policy has stayed the same. The interest rate has now been for some time at 6% per annum, and is likely to stay there. But the exchange rate has fallen quite substantially during the year, from 23.5 hryvnia per dollar to, for quite some time, 28.6 hryvnia per dollar. Now it has improved substantially, and we should probably expect more improvement, but this is because of 2 reasons. One, this the improvement in the terms of trade, and the other that Ukraine has now managed to buy, to sell a lot of bonds, and this has improved the situation. So I would not worry about macro really, in spite of this massive government attack on the National Bank, which is quite indefensible, since the National Bank, as Roman emphasized, has done a great job. You don't sacrifice the best. And we have now are also seeing a persistent move in the government. The whole government was sacked on the 4th of March, and the next day the Prosecutor General. And we don't see that any of these appointments suggest an improvement. On the contrary, we are seeing a steady reversal of reforms. And particularly, it is the legal situation that has become very worrisome indeed. And I'll take 2 outside signs of this. There is an organization that measures the numbers of corporate raids, that is the thefts of companies in Ukraine. And they recorded 751 corporate raids until the end of September, more than for the whole of last year. And this means that there are no property rights in Ukraine. Anybody who invests in Ukraine can expect or fear that their enterprise will be stolen. And the other indicator is that foreign direct investment this year, in the first 10 months, has been only $200 million. While normally Ukraine has a 3 to 4% of GDP in foreign direct investment, this is less than 0.2% of GDP. So what this says essentially is that both Ukrainian businessmen and foreign businessmen consider that it's virtually impossible to invest in Ukraine. So what we have heard here is large amounts of money from official sources. The private money is not coming because the corporate governance situation and is deteriorating. And the European Business Association made a survey among their members, and it came out that the big problem is the courts. So it's not, so to say, small-scale corruption among officials. It's the courts that are the big problem, and one can add other parts of law enforcement. And Matteo touched a little bit upon one specific aspect, and that's the complete mess on the electricity market. So that there are now about $1 billion of outstanding claims on the electricity markets. There are other countries that have had a problem with too high green tariffs. Ukraine has had a very high green tariff since the Yanukovych period. And it can be handled in many ways, but it needs to be handled. And what effectively happened was that the government didn't do anything. And then you wonder, why didn't they do anything? Well, such decisions have to be made by the president. The president, for obvious reasons, hasn't got a clue how to solve these very complex electricity issues. And what happens then? Nothing happens. And therefore now, probably 5, 6 of the biggest investors in green energy in Ukraine will take Ukraine to international arbitration courts, which will be a serious concern for years to come. It could be solved in many different ways, but that requires that somebody who's both knowledgeable and an effective decision maker can handle it, and nobody dares to do anything because it has to be done by the president, and for natural reason he doesn't know what to do. And the situation means that private investors are very worried about getting in to Ukraine, so that this macroeconomic windfall that Ukraine has got this year is not resulting in substantial investment. And of course, this is a tough time generally, but I don't see that anything is being done here really to improve it. Thank you. Sorry to be dumb.
No, it was very, very interesting. And I think we all share Matteo's point that there's a rub-off effect. Essentially, if they mistreat the solar and wind investors by changing the rules of the game, do you really want to build a highway or a port? And these are issues that people have to take into account, and it raises the Ukraine risk. And unfortunately, as the editor-writer of the Ukraine Business News, I'm a little short these days on new private sector investments. I'm keeping things going with what the IFIs are doing and that sort of thing. Quick point, Anders. Yesterday, I had a one-on-one with Kurt Volker, who we discussed the possibility, the probability of the IMF coming back in. He gave me his sense of it, and this is also predicated on how involved the Biden administration will get. If we had this conversation 6 months from now, Anders, do you think the IMF will have dispersed the second tranche?
I doubt that the IMF will disperse any more money to Ukraine as long as Zelensky remains president.
Well, that's pretty rough.
Let me move to, I forgot to respond to your actual question. What we should expect from the Biden administration is 2 things. One is very strong support for Ukraine's sovereignty, more military support, and the other part is tough love with regard to the reforms. So Biden himself knows Ukraine extremely well. He was there no less than 6 times as vice president. And he has a team that knows it very well. So in particular, Antony Blinken, who was there with Biden most of these times, and Michael Carpenter, who will probably become the main decision maker. So tough love will be the wording. And my hope is that this can change the Zelensky policy. So you can say that Biden and his engagement in Ukraine is Zelensky's last hope of getting any policy together, because what we have seen recently is really that the 2 dominant sources of influence in Ukraine are Zelensky's sponsor, Igor Kolomoisky, who's just about the worst businessman in Ukraine in legal terms, and Viktor Medvedchuk, who has been sanctioned by the US since March of 2014, being a major sponsor of Russia's annexation of Crimea. These 2 must
right.
be
Anders, we got a couple of questions for you coming in, and since they're for Anders, I'll give them to you. One is from Clifford Bond. For Anders, the National Bank of Ukraine recently reported a sharp drop in FDI in Ukraine. is that attributed to COVID or other reasons? And there's a second question for you about Hmelitskого Oblenergo, that the state property fund wants to sell it, and it's a profitable one. They're worried that it'll be sold for peanuts. I've gotten a lot of people bending my ear about this Oblenergo. Has that crossed your radar screen? Do you have any thoughts on that? And the drop in investment, how much do you attribute that to COVID, and to how much to sort of disillusionment or skittishness about the Zelensky administration?
Yeah, on the foreign direct investment, which I already discussed, I think that the mess on the electricity market is the main cause of it. And second, the Constitutional Court that Roman mentioned, that they have effectively thrown out the whole anti-corruption framework. The parliament is now trying to reestablish it, but in a softer form. And it seems to me that the Constitutional Court now has 11 judges who are simply fighting for corruption, and they should be kicked out by some means. On the state property fund, I think is the best institution now, apart from the National Bank. And Dmitry Zhanychenko, I think, is outstanding. So what he does, I trust. He carried out this very successful sale of Hotel Dnipro in the center of Kiev for just over $40 million. So if he thinks that it can be sold properly, I presume that it's correct, while of course getting into the electricity market in any part of it, you suffer from the lack of a reasonable electricity policy and ability to pay for it from the state.
Quick thing, and as you mentioned today and last week about the 20% devaluation of the hryvnia, now that really finished at the end of March. And since the end of March, the hryvnia has basically been stable, despite the president talking down the hryvnia last July, saying, wouldn't it be nice if it was 30 to the dollar? It's now 28 to the dollar and may go a little stronger. And we saw yesterday this record auction of the obligatia. It was about $1.85 billion equivalent, largely in hryvnia, bonds that people bought, and a whole range from 3 months to 7 years. The feeling is at least 20%, maybe 25% were foreign investors. Now, if you're a foreign investor and you're starting to believe the hryvnia has stabilized, you're getting a minimum of 10%. Well, the U.S. Treasuries, you may as well just dig a hole in the backyard and put your money in the steel box. I mean, it's like 1% or something pathetic. The Europeans are the same. So even though, once again, Ukraine is not perfect, it's offering 10% on your money. And do you suspect that maybe some of the deficit, the budget shortfall, will be covered by people coming in and buying bonds, and the powers that be may say, well, we really don't need the IMF because we can do an auction and just pull in almost $2 billion in an afternoon in local currency bonds?
I think that you're just right on what you said here.
There was a question mark there somewhere.
Yeah, but essentially investors are running for high yields now. Ukraine offers just about the highest yields with comparatively least risk. I'm not worried about macroeconomic destabilization in Ukraine. But this is very much like what happened to the Yanukovych regime. It got money in July 2010, and then they thought that we can sell Eurobonds on the market. And they didn't bother about any IMF money. And then after a year or two, by 2012, the markets were closed. And the IMF was closed. And this can very well happen again. We have
Yeah.
now an extreme situation that you can hardly get any return on anything. But this is hot money that comes and goes. Ukraine had a similar inflow last year, and then people wanted to get out, and we got a pressure on the but I think that this is a good investment now if you are a speculator. Jim, I see that Roman wants to come in.
Yeah, Roman has electronically raised his hand. Roman, what are your thoughts?
Well, on the, I spoke about the sustainability of that, and exactly what Anders just mentioned, that there is a lot of money right now on the market globally, and Ukraine is able to benefit borrowing from this. But this money are very volatile and as Anders said, hot money, so they can be easily gone and not accessible for Ukraine. So it's extremely important to build a sustainable borrowing from across the wide range of investors, not only those who are investing in the short-term bonds, but also the institutional investors. As I also wanted to comment on the FDI inflow, I think it's a global pattern this year. Obviously, the FDI collapsed globally, not only in Ukraine. That's why Ukraine mostly followed the global pattern. Ukraine had many challenges on the governance in the past years, but it still managed to attract the FDI to the sector. And I believe there will be a rebound of FDI next year, regardless of the policies. But it doesn't mean that Ukraine shouldn't move on with the reforms. These reforms are critical, basically, to achieve the level of growth which Ukraine deserves, and finally narrows the gap between even our closest neighbors in the Europe. And also my final comment on the energy market, the World Bank was quite consistent in advising Ukraine for many years on rebalancing the energy market. It has zero exposure. It never landed to Ukrainian solar projects from the very beginning. Also, the terms were very lucrative for many investors. But we observed such crises in other markets, like in Spain, Bulgaria, Romania, and we're quite consistent advising Ukraine to implement the auctions. And recent auctions, even in Uzbekistan, showed that the energy can be purchased for less than $3 per kilowatt on the projects when the proper auction is made. So obviously we now have the big issue which was built up in the past couple of years. It needs to be resolved, no questions. A lot of international investors are involved. But the lessons has to be learned, and probably the new policies, the policy has to be amended, which will not lead to such costly resolution in the future. And the bank, since it doesn't have any exposure to Ukraine, is probably one of the most trusted advisors how to resolve, and the team is working on that. Thank you.
Thank you, Roman. And Matteo, you've been sitting there very patiently over there in London. You've listened to the other IFIs, you've listened to Anders. What are your thoughts? We've got another minute or so.
I did listen very, very carefully with to what my colleague said, and was fascinated by Anders' expose. One comment on the banking sector, which indeed I didn't touch, and in particular the state-owned banking sector. Indeed, we are, as everybody knows, considering a transaction with Åslund. We would like to proceed. We have in discussions with both the Ministry of Finance and the bank itself, especially now that the new CEO finally was able to take on his role. There are a few conditions for us that need to be fulfilled for us to be able to move on with the negotiations. One is the accession of the bank to the Deposit Insurance Fund, because we want a level playing field, and it's not tenable that Åslund doesn't play in the same field or with the same rules as the other banks. and obviously the management team needs to be completed. But also going back to the considerations about the latest issuances and the $1.85 billion that you just mentioned, quite a big chunk of these issuances are taken by the state-owned banks, and we would be willing to invest in a bank that is actually playing in the market and investing in corporates rather than in treasury bonds. Going to the considerations that Anders was making, I think I'm a bit more optimistic than he is on a number of fronts. Indeed, obviously I share his assessment that 2020 has not been a record year in terms of achievements in corporate governance and investment climate. I did mention issues myself. But on both fronts, I think there is some room for optimism in the governance or in the corporate governance sphere. Many of the issues that we have seen are at least partially counterbalanced by a recognition from the authorities that the course of action needs to be changed. And again, I mentioned our partnership with the Ministry of Economy in this sense for the 6428. I mentioned the memorandum of understanding, and some of the negative decisions that have been taken over the course of this year have been reversed. Too late, with some damage done, true, but you know, the reform trajectory is never linear, and as long as mistakes are corrected, I think we should have some cause for optimism. And in the private sector, I agree with Roman's assessment. FDIs have gone down everywhere, and I think we cannot really compare what happened this year with what happened in 2019, even if I stand by my words in terms of issues related to the investment climate that need to be changed, that need to be addressed. And rule of law is obviously the first one, but also I mentioned predictability, the curbing of vested interest, et cetera, et cetera. All the issues that we know are present in the Ukrainian economy.
Good.
Jim,
Yeah.
the timekeeper, the police are threatening to cut us off. Let me, before we let the next panel come on, I just would like to express appreciation, Jim, for you moderating this excellent panel. And I must just comment that, you know, you've got a lot of experience, I guess 15 years reporting in Ukraine. You've worked for Bloomberg News, Voice of America, New York Times. And it's great that you chose to come to Ukraine and be reporting, I think, balanced reporting on Ukraine business news. So thank you. Thank you.
I hope everyone is reading. A little promotion here.
Okay, absolutely.
Yeah. Tell your friends. And Nadia, we're starting in Polish next month. We're in English, Ukrainian, Russian, German, French, and we're adding Polish, 6 languages. So.
Congratulations. That's great.